In today's video, I want to reveal my portfolio to you, and as this channel is all about transparency and I'm sharing with you my weekly stock buys, I thought it might also be interesting for you to see how my total portfolio has been developing, because obviously it's very easy to show your portfolio when times are good and the numbers are up. But let's be honest, in recent times, stocks, cryptos and other investment classes have pretty much on a downtrend. But that's why I still want to share with you how my portfolio is doing, because as a long-term investor myself, these are normal parts of investing. Life is cyclical, so is investing. Anything has its ups and downs, which makes it even more important to stick with it for the long term. So without further ado, let's get started. Now here we are in my Interactive Brokers account, and you can see here already right away my net liquidity. That's basically all my investments plus the cash that I have in my account altogether. Invested, I have around 30,000, and then you can see here settled cash, basically money that I have left to invest, is 1.4. So in total, just over 31.1. And yeah, honestly, really happy with this. When I actually started the year, I can go back over here. I started off my portfolio with just 12,000 euros. So really nice development. Now, sadly, this is not me being an investment guru. This is obviously also additional contributions every single week. I dollar cost average by buying stocks, especially dividend stocks, every single week. And for that, I make obviously cash contribution and deposits into my account. And with this, I buy more stocks. That's sadly not just my investment wisdom, but still, when we see where I started to where we are today, almost tripled the portfolio. And you can really see here the power of dollar cost averaging over time. And yeah, I'm really happy with this. Obviously, there have been ups and downs. The biggest part comes from the cash contributions. But as I said, long term, if I continue this over 10, 15, 20 years, the portfolio size will become really substantial. And then if I take my 3-4% dividends out of this, it will be a nice annual dividend income for sure. You can also click over here on performance to see a few more performance insights. And obviously, once again, this shows you the year-to-date time-weighted returns. I'm happy with this, that I'm sticking with it, and not just when the markets are going down, as they are right now, I'll stop, right? That's exactly a danger, and you have to keep going. And I'll take you through my portfolio in a second to see, yeah, it has been painful for me, definitely. There have been really quite a few setbacks. But once again, it's the power of sticking with it consistently over time. We start seeing nice compounding results. Now, also in case you're wondering, all my account is set up in euros, but you could change it in the settings to dollars, pounds, what have you. Depends where you invest the most. Actually, to be honest, my biggest portfolio is invested in US stocks, in US currency. So I should probably change it to US dollars. But since I'm myself transacting in euros mostly, I still want to see how much is in euros. But having said that, those currency conversions can sometimes also, offset your statistics a little bit, because you might actually be profitable with your investments in a particular currency in those stocks. At the same time, the currency conversion goes down, and then all of a sudden, despite actually making profits with your investments, you might be at a loss because your currency conversion has a high impact on that, and that offsets any gain. So, it's something for you to explore and play around with. For now, I'm sticking with euros, but as the amounts get larger and I have more of my money invested in US dollars, I might actually switch to showing it in dollars. And then the nice side benefit of it is, of course, that the number will immediately be higher. So from here, you can do a number of things, but very quickly, just to show you the portfolio analyst, you can click over here. And they are getting better interactive brokers. It used to be a really, really painful website to see any kind of statistics, but they're really making gradual changes and improvements over time. It's still not as user-friendly as some of the other apps that I use, such as Lightyear, Trade Republic, or Trading 212, which are some of my other favorite brokers as well. But still, I really enjoy the platform overall. So you can see a number of statistics, etc., to really dive into any detail you want. You can also pull out PDF reports, change the frequency, time period, whatever you have to your holdings reports. So you can really do a lot. But as I said, at first it might be a little bit overwhelming, but once you get a hang of it, it definitely gets better. One of my favorite widgets that they finally added, and it was really a pain to see how much income you're making on Interactive Brokers, but finally you can see your projected income. And as you can see over here, in total, I'm about to make 880 euros in a year from my dividends. So I'm really happy with this. And as I continue to invest, that number grows. When I started the year, as you've seen in the beginning, my portfolio was at 12,000. I made around 120 euros in terms of dividend income. Now that I invest more specifically into dividend growing stocks, this number definitely goes up. And my next goal, of course, is to hit the 4-figure dividend annual income. Right, with this, let's hop over to my portfolio to give you a rundown of all my holdings. And as you can see right away, I don't really have that many. In fact, in total, I have 15 holdings, which really isn't too many. I've seen people having 30, 40 holdings. And for me, it's just too difficult to keep a track of them, because the companies I invest in, I also want to follow. I want to know what's going on. And if you have more than 15 or let's say 20, up to 20, I could see myself having, but 30 or 40, there's no chance that you will be able to track them. Now, I'm obviously not tracking them on a daily basis or even weekly basis, some of them just on a monthly basis, but still, I want to have a grasp of what's going on. And 30 or 40 companies, honestly, I have a full-time job, I have a family, I run a YouTube business, I have personal hobbies, to then dedicate the time to read the reports and go through for 30 companies, honestly, I'm not a professional investor and probably neither are you. So I think it's good to have a number of stocks. And when I look at people like Warren Buffett, they have, I think, 10, 12 stocks in their portfolio. So, if you kind of know what you're doing, I think if you spread yourself too thin and have too many investments, in the end, each individual also won't contribute as much. So I'm also not a fan of having 2-3 stocks. So I'm really a fan of diversifying, but not over diversifying. So that's why 15, as I said, I might go to 20 stocks, but more than that, I don't really want to have in my portfolio. All the stocks you can see here are pretty much dividend paying stocks, except for one, unfortunately not yet, hopefully one day, but Google right now does not pay a dividend, but I bought it before my dividend buying strategy. I was actually at some stage thinking to sell it and then trade it into a dividend paying stock, but at the same time, Google is such a good stock to have, so I don't really want to sell it. And actually, as you can see in a second, she brought me quite a bit of profit so far. Right, so why don't we go down the list and see what I have here exactly. So this is actually sorted by market value. And this view, you might not have the same when you first log in, but you can very easily customize this. If you click over here to the 3 dots, just click on that and then click on edit columns. And here you can basically play around, add anything you want to have there that you want to see. So you can really make it your own of all the things that are important to you, maybe the dividends, you want to see certain things, the position and P&L, how it has developed. So you can really make it your own how you want it to be. So for me, I have it set up as such. And right now I have it filtered by market value. So where I have the most invested to the least invested over here. So let's start off with WUSA, which is basically the S&P 500 ETF for Europeans, because we cannot buy the Vanguard S&P 500 VOO in the US, but in Europe we have to buy the VUSA, and that is a distributing ETF, meaning they pay out quarterly the dividends. There's also accumulating S&P 500 ETFs that are reinvesting dividends, but I always like to see the dividend income and then I can choose what to do with it, either reinvest or pay it out to myself. So I like to have distributing ETFs. And you can see that over here, the last dividend I got from it was in September 28 and I got 38 euros, which is definitely a nice amount. And this is being paid to me on a quarterly basis. But at the same time, the dividend is rather low at only 1.4%. So honestly, I haven't really been buying any WUSA this year. This was pretty much my biggest holding from the last few years, where I only invested in because I didn't really want to do individual stock picking. And it's really my recommendation for most people who really don't want to spend time looking for stocks, analyze them, etc. If you invest in the S&P 500, the WUSA, honestly, you can't really go wrong because these are the 500 biggest companies in the US. And honestly, if they go down, I would say we have a global problem because by default, these companies are global international companies. They're already diversified internationally. All those companies operating there, they're global companies. They don't only operate in the US because some people say, well, you should invest into a global or world ETF. And I get it, right? But at the same time, a lot of the countries that are part of that are much more opaque and can't really see what's going on. I mean, Chinese stock market, I get way less information and insights than I get from the US stock market. So that's why I'm really a big fan of the WUSA ETF, S&P 500, but honestly, ultimately, it's your choice. Now, as you can see over here, the market value, unfortunately, is a little bit lower than the cost basis, meaning I spend more to acquire this ETF than it's worth right now. So as you can see over here, I lost 141 euros, but honestly, I'm not really so bothered as I'm a long-term investor, and I know that long-term, this ETF will do very well. That's why I keep dollar cost averaging. As I said right now, I'm not so excited about the S&P 500 as I want to buy higher yielding dividend stocks, but I'm still very confident and hold my position in that ETF. Next up, we have O, which is basically standing for Realty Income and is one of the biggest real estate investment trusts. I really like real estate, and it's not always so easy to buy actual real estate, but investing into a REIT such as O gives you the opportunity to participate in real estate gains. Now, what I like about the stock, I'll make a separate video in the future analyzing that stock in particular, but they pay me a monthly dividend, which is really nice. And you can see here, last month I already got 17 euros paid to me. Now, when I started, I only got 1-2 euros, but now that I bought more and more every single month, this number is definitely going up and I really appreciate it. Right now, the stock has a dividend yield of 5.7%. Right now, my holdings in Realty Income is worth 3.3 thousand, but I bought it for almost 4,000. So that's actually one of the biggest drops I have in my portfolio of almost 700 euros. But once again, I'm really not too bothered. I'm getting a good dividend. I'm using this time right now at the low stock price to build a bigger position into all because I'm really confident that long term it's going to come back and it's going to pay me that nice juicy monthly dividend. And yeah, I don't think real estate is going to go anywhere. Of course, we know right now that it is getting hammered because interest rates are so expensive. So to borrow money, invest and acquire new buildings, it's super expensive. So the market is very much slowing down. But this is not really specific to Realty Income only, but to most REITs and real estate related companies. So I'm really not too bothered about this. Now, Google, I don't have to explain too much. I really love the company overall. It's, as I said, the only company that doesn't pay me a dividend, but at the same time, it turns out to be currently my best performing company. As you can see over here, I gained 434 euros I'm in the plus with Google, so I'm really happy. So I'm definitely not selling it right now. I could take profit from it, but once again, I still think they're undervalued. Long term, with the introduction of AI and so many new projects coming up, I really think this is only going to go one way, and that's up long term. Next up, we have BlackRock, which is always in the news for not the best of reasons. The everyday people say how bad the company is and they're controlling and running the world. They are technically the biggest money manager in the world because they also issue a lot of the ETFs. And as they are the issuer, they obviously invest on investors' behalf in the various companies. So pretty much any company that you look up online, you will see either BlackRock, Vanguard, or other ETF issuers in the top holdings, because obviously they take the money from the people and invest it. Now, I'm not here to judge or take moral stands, but I'm here to make money as an investor. I really believe in the company. I think they go in the right direction. And yeah, while currently the returns are down a little bit, I really like the dividend yield of 3.2%. I really try to aim for anything above 3% because right now, where we get interest rates of 4% on my savings, I don't really want to have a company in my portfolio that pays me less than 3% because it makes it just so much less attractive. But yeah, in the case of BlackRock, I'm really happy with 3.2%. And while I am down at the moment, I think once again, long term, the company is only going to go one way, and I will make sure to dollar cost average into them as they continue to drop for the time being. My next biggest holding is Pfizer. Now, once again, a little bit controversial company for some of you. You might be saying, well, they do all these testings and so on. Let me tell you, there's a lot of controversial companies. If you really dig down into the company, what they're doing, they're all global behemoth companies. If you really think all of them are operating with a clean sheet, I wouldn't be so certain. But yeah, for me, at the same time, I see how they're also helping by developing certain medicine that people need. Probably only going to get worse because people are going to get sicker and various diseases out there. So, we need people to come up with solution for this. So Pfizer could definitely be one of them. And obviously they had to hide, 2 or 3 years ago when something happened. We all know we had to stay at home. They came up with a solution at the time. They really capitalized on that. Huge revenue, record-breaking revenues. And since then, obviously, it came down quite a bit in price. But yeah, as you can see over here, right now, I'm down 400 euros. But I really like the dividend of 5.3%. For me, that's super attractive. And while there is still a bit of uncertainty around Pfizer, I'm really happy to capitalize on that uncertainty, invest more in it, because once again, long term, I don't really see them, disappearing or going down much further. I really think I can build up a sizable position in it and then capitalize in the future on some nice dividend payouts. Then we move to my second REIT in my portfolio, which is Vici. They basically control the Las Vegas Strip. If you have ever been to Las Vegas, you see most of these casinos and fancy hotels, they basically belong to Vici. Now, they don't operate them, but they own the land and lease it out to those various operators. And that really is a profitable business to be in. As you can see right now, they're paying me a 5.9 dividend, which is really nice. But at the same time, they're in a similar boat as Realty Income, which I've shown you before. That's why I'm also down 200 euros, because for them also, they make money by borrowing more money at cheap cost, which they could previously do, and then acquire new properties. But right now, this is not really happening. Some casinos are also maybe struggling a little bit. Then they try to lower the rent, which means lower income for them. There's obviously a ripple effect in the market, so there might be a temporary headwinds for Vici in the future. But honestly, long term, I really don't think gambling is going to go anywhere. People love going to Las Vegas. There's going to be Formula 1 this year, which I'm really excited. I'm a big F1 fan. And it's going to happen. It's going to bring so much attention and revenue to the city. So yeah, and I also like that they don't really have any operator risk. If one of them fails, they can just get a new tenant in there, because there's always people interested in operating their business in Las Vegas. So I think it's really powerful. And now they're also venturing into other destinations and geographies to diversify the offering a little bit. So I'm really bullish on Vici long term. Next up, we have Apple. Now, how else could it be? I'm a big Apple fanboy. I have all their products. Now, naturally, I invest so much in the company myself for personal reasons. I should also invest in them from an investor point of view. Now, as you can see over here, I'm pretty much break even. I really haven't gained much from it. It's still the most valuable company in the world. That's why they get away with such a low dividend of only 0.6%, which honestly is not really impressive, but at the same time, I'm happy to take it. For me, I almost consider Apple a non-dividend paying stock, similar to Google. I really invest into the long-term prospect of Apple. I really think they're going to be ready and capitalize on future technological gains. Now, in terms of iPhone upgrades, etc., there's only marginal growth, but with all the services, payment gateways, and as I said, AR, VR in the future, I'm still confident there's going to be a big upside for Apple in the coming years. Next up, we have Coca-Cola. Well, I don't really have to talk too much about Coca-Cola. I made a whole video about it, analyzing the company. It's not just the fizzy drink of Coke itself. They have so many different beverages. They really want to be a total beverage company with waters, juices, other soft drinks, energy drinks. So really powerful behemoth company, has been operating for so many years. a dividend king, paying dividends for over 50 years and increasing them. So yeah, right now they've been definitely on a downtrend. I'm a little bit down, 54 euros, but I call it break even. And finally, the dividend is up to 3.4% because the price is going down. The dividend as a percentage, which they haven't cut yet, starts growing. And that's nice because previously they always used to be between 2.5, 2.6%. And that wasn't really attractive for me. But now that the dividend starts going up, I'm definitely excited to buy more Coca-Cola. Next up, we have more Altria, which is one of the biggest smoking companies in the world. I believe they refer to themselves as an inhaling technique company or something. Makes it sound a little bit more sophisticated, but ultimately it's various different smoking brands that they offer. And now they're also going into vaping and other things. So once again, a company not everybody might feel comfortable investing in. But, for me, I always say, as long as it's legal and people are doing it, they're enjoying it, they're paying money for it, why can I, as an investor, not capitalize on it? And yeah, that's why I will continue to invest in them. For one simple reason, right now, they're having a 9.2% dividend. Now, clearly, this company is probably not going to have the biggest growth upside in the future. Some people say it's a dying business that's running out of steam. I hope that they diversify away from the traditional smoking to vaping and other new smoking technologies. When I look around, all the young people, all of them are running around with these kind of things in their mouth. So it seems to not stop. It just seems to transition. And I hope that Altria will be able to capitalize on it. Right now I'm down 63 euros. So once again, it's break even. But at the same time, I'm getting 9.2% annual dividend income paid to me. So I'm really excited about this, and I'll definitely continue to dollar cost average into them going forward. Next up, we have MAF2. Now that doesn't sound very exciting, but basically it's called Münchner Rückversicherung, which is basically a reinsurance company. So it's an insurance company for insurance companies, basically. So the insurance companies, they have their own insurance company, and Munich Re is one of the biggest in the world actually doing that, and they've been very, very profitable over the last few years. Now, granted, the last few months have been a little bit of a setback, but still, if you can see over here, the 1-year price development is definitely very much encouraging. And generally, I like the insurance business. As you can see over here, it also pays me a very healthy dividend of 3.1%, and it's one of the few European companies, so I invest in euros in Europe, in Frankfurt actually. And yeah, for me, I'm really happy with this. I made a bit of money, 125 euros, so that's encouraging to see. As you can see, most other positions are in the red, so that's one of the few in the greens. And definitely not the most exciting companies. And what I don't like about most European companies, they sadly only pay on an annual basis. So while ultimately in terms of total dividend income, there's no real difference if monthly, quarterly or annually. But at the same time, as an investor, psychologically, it's nicer to see that income on a monthly or quarterly basis rather than having to wait for a whole year. Next up, we have Blackstone, another big investment company. And as you can see over here, I'm actually in the plus. This used to be super, super high plus, I think well over 500 euros. But in the last 2 months, they set back a little bit. You can see they pay a 3.4% dividend, which is quite nice. But yeah, honestly, the price had really been shooting up and I capitalized on it. I was really riding the wave. But as you can see over here, sometime from September, they had a major setback. Once again, related to the high interest rate, this recession uncertainty looming because they're investing, right? They acquire new business, they develop companies and then spin them off, exit, and then pay out those proceeds to the shareholders. So obviously right now, the business conditions are not really conducive for such companies. So there might be further pain in the markets. But once again, long term, I think they've been doing extremely well. When I look at the 5-year performance over here, you can really see definitely very nice growth over time. Then we move on to my second beverage company, which is Pepsi. Of course, everybody understands what the company is all about. But once again, it's not just Pepsi. They have so many different beverages, but also foods in there, chips and other sweets and snacks that they're offering and going to continue adding those in the future. Pretty much break even. Actually, it's performing in many ways very similar to Coke. They're going up and down at the same speed. Even you can see the dividend is fairly similar to Coke. So yeah, really no surprises. But both of them are controlling the market. I couldn't choose between one or the other. So I thought, why not both of them? I don't actually drink either of them or eat any of their snacks. I try to live a healthy lifestyle. But once again, same as Altria, I know that people do that, right? There's a craving for that. So why not capitalize on it? I think there's nothing wrong for people drinking Coca-Cola. Warren Buffett, one of the most successful investors in the world, is drinking it every single day, different Cokes. And again, why not? He's still alive. He's still healthy. So if it works for you, great. And why not for me as an investor to capitalize on it? So definitely not the most exciting company with a huge upside potential in the future, but a very solid company where I know my money is going to be safe and growing slightly every single year for the next coming years. Then we have MS, Morgan Stanley, definitely a little bit more risky and volatile company. But once again, as you can see, the 5-year evolution, definitely very, very good. However, in the last few months, sadly, there have also been quite a setback. Because for similar reasons, once again, with interest and financing becoming so expensive, Morgan Stanley is also an investment company that does deals, right? And in order to make deals, you need money. And if money is expensive, deals are becoming more expensive and less lucrative, less profitable, and overall the volume will just slow down. So, that's very logical and very normal to assume. At the same time though, the dividend yield has been increasing to now 4.7%. I'm really happy with this, even though I'm down 124 euros. Once again, long term, a company I'm really excited to invest more into. I think they're doing well. They're having right now some leadership change, so hopefully they will soon appoint a new CEO. They have clarity. I think that is also factored into the price volatility a little bit. But yeah, I think long term, they're really going to be doing quite well. Next up, we have MC. Now, do you know what is MC? No, it's not McDonald's, but in fact, it's actually LVMH, Moet Hennessy, or what is actually Europe's second most valuable company. Now, this is a global fashion powerhouse owning so many brands. Probably all luxury brands that you ever heard of are somehow linked or owned by LVMH. Really an incredible company. While I'm definitely not a client of theirs, I refuse to pay that much money for a handbag or some clothes, what have you. I know a lot of people are. They like the status that owning such good gives them. So again, why not capitalize on that? And once again, as it is a European company, my second one in the portfolio, I'm happy to support them, even though they are also feeling a little bit the heat right now. This price is getting so expensive, inflation going through the roof. Even the rich people or upper middle class is starting to look at their bank accounts and spending a bit more carefully. So you can really see how the price has been resetting from the highs. I mean, that was really the highest highs. This was the time at which stage the CEO, Bernard Arnault, was actually the richest man in the world. So yeah, you can imagine how powerful of a company it is. But yeah, since then, they have been declining a bit in price. But once again, overall, I think it's a promising company. I was considering to sell them because I think the downturn might last a little bit longer. Plus, usually they only pay on a biannual basis the dividend, and it's not exactly the highest dividend. Right now, it went up a little bit because the price is down to 1.7%, but it's not really super exciting as a dividend investor. But from a company point of view, definitely a company that I feel very happy with to own and wouldn't mind owning more of in the future. And lastly, we come to my smallest holding, which is J&J, Johnson & Johnson, another pharma behemoth company. Probably all of you heard about it or used some of their products at some stage. Now, as you can see, my holding in it is very little and I'm actually break even. The dividend is 3.2%, so nothing really too exciting. And honestly, a company I was debating to sell and switch their position into something else, and I might actually just end up doing this. Now, I invest into Pfizer, and similar to what I did with Coca-Cola and Pepsi, I thought, why not own both of the biggest pharma companies? But at the same time, I just like Pfizer more, the way they're going, the management, etc. And as I said, the amount is so small, the dividend is rather low, so I'm not really too excited about increasing my position in Johnson & Johnson. Right now, I'm holding it, but eventually I might exit out of it and then use that money to invest into one of the other stocks that I have in my portfolio. And there you have it, a real honest look behind the curtain of how my investments are doing. You can see I'm by no means an investment guru, and I really think anyone who promises you that online that they are, you should always take it with a grain of salt. Because even if, for a month or 2 months or 3 months, my numbers are up, look at their portfolio in a year from now or 2 years, it's always a question of what period. If I just showed you a period, for the last 1 week or 2 weeks, I might be very much in the green. But then if I zone out and see the total performance, it might be right now down. But once again, as I'm a long-term investor, I'm honestly not too bothered. I don't even check on a daily or weekly basis my portfolio. I look at it mostly on a monthly basis, see where I'm going, see how my dividends are developing, and obviously how the long-term outlook for my portfolio looks. And if there are any critical positions, red flags that I see, or companies where I really lose trust in because they have a major change in management or strategic outlook, then clearly I might exit my position and switch to another company. And since I only have 15 holdings right now, for me it's quite easy to stay on top of it. And since I'm a long-term investor, I'm really not bothered what those companies will do in the next 6 months, 12 months, 18 months. I'm interested into 10, 15, 20 years down the line. And I'm very confident that by then, if I continue dollar cost average into my various positions, that number will significantly grow and my overall return will be very much in the plus. So make sure you subscribe to my channel so that when I do my update video of my portfolio 20 years from now, you will see the results of that. In the meantime, if you want to get started on your investing journey, I definitely recommend you to check out Interactive Brokers. Use my link in the description below to get started and you help out the channel in the process. Next up, check out this video over here. As always, thanks so much for watching. Stay healthy, get wealthy, and I see you in the next one. Ciao.